Let's get back to some more insight onto the interest rates decision today. As I mentioned before, the Reserve Bank today left interest rates on hold. That's at 3.6% for the cash rate. I want to go to Gigi Foster, Professor of Economics at the University of New South Wales. Good to talk to you again, Gigi. This was expected, this move to keep interest rates on hold. I guess what might not have been expected by so many people is the governor suggesting that could be it. There might not be any more rate cuts in this cycle. In fact, the next move could be up. What are your thoughts?
Yeah, that's right. And I don't know if they'll actually be going up. Certainly not before the end of the year, because I don't think Michele Bullock would want to be a Grinch that stole Christmas. But I do think that staying on par, on the same level for at least the next couple of calls is likely. Basically because there are two different objectives that the RBA is trying to balance here, right? We're trying at the same time that inflation is going up to also counter some unemployment and labor force data that would, generally speaking, encourage you to lower rates. And so they're kind of caught, in a difficult position here. And I keep thinking that as we continue to move beyond the COVID era, we're going to start seeing the entrance of new young labor force cohorts who are not as able, not as productive, not as skilled, not as socially skilled as the previous cohorts. And that's going to be bad for productivity, and it's going to be bad for employers who are looking for skilled workers. So I think that kind of feeding into the labor market will continue over the next few years. And that is going to continue to weaken our labor data, productivity, and things like employers seeking skilled workers.
Yeah, that's a worrying.
That's going to be a continued problem. Yeah,
that's a worrying bit of analysis, because productivity is really where we need to lift. I just want to go first to some comments from Michele Bullock today, which were really addressed to mortgage holders, people who really wanted another cut to their interest rates. Have a look.
I would say, though, that we've already had 3 interest rate cuts. I know that mortgage holders always want more, but it's also important that we make sure that we keep inflation under control, because ultimately that's also what impacts people's living standards. So it's really important we get that right too.
Yeah, so the big bogey here, the big bogeyman is inflation. To what extent is our national energy crisis driving inflation?
Well, we know that the recent inflation data came through after the electricity rebates from the government started to expire. So that was, again, baked in. But even with that, we kind of exceeded the mark of the predicted rise. So definitely it has been a major factor. And I've said on your show before, Chris, and I still believe that the government's actions are really clouding the signals that people like Michele Bullock are trying to read in order to properly steer our markets. And that's not helpful. Even this free energy business, that's interference in a market, and it's not helpful. It is basically constraining people's choices, saying, oh, if you just run your dishwasher at noon instead of overnight, like most families do, you'll get a freebie from the government. It's encouraging dependency on government, and it's constricting people's free choice in what should be as free a market as we can get. So I don't like it, and I think it is something where there's this bait and switch that has happened. Oh, we'll give you some free energy, but on the other hand, maybe that's going to expire after a while, these rebates that we've given you, and therefore you're going to end up having to pay down the track anyway. It's very despairing. I mean, I despair about the attitude of some of our politicians in Canada.
Yeah, they don't seem to think much beyond the next poll. Thanks for joining us, Gigi. I appreciate it.